So let's come toward explaining the internal control. The components of internal control are broken down into five components. Number one is control environment. Number two is risk assessment. Number three is information system. Number four is control procedures. Number five is monitoring of control. So exhibit 4.4 diagrams the components of internal control. So let's discuss this one by one. So control environment is, let me just change marking color here. So a control environment symbolized by the roof. If you just go to the previous, I just want you to just open the slides, take that exhibit 4.4 in front of you and just listen this slide as well. Then you will understand better. So the control environment symbolized by the roof over the building in our exhibit 4.4. So it is the tone at the top of the business. It starts with the owner and the top manager. So they must behave honorably to set good example for the company's employees. The owner must demonstrate the importance of internal control. If he or she expects employees to take the control seriously, so a key ingredient in control environment of many companies is corporate code of ethics, molded by the top management, which includes such provisions as prohibition against giving or taking bribes or kickbacks from customers or suppliers, prohibition of transaction that involves conflict of interest. For example, CEO just grants approval to buy raw material from his wife's company. This is a conflict of interest. And also provisions that encourage good citizenship and corporate social responsibilities from the top management as well. Right? The second one is risk assessment. It's symbolized by the smoke rising from the chimney. Assessment of the risk that a company faces offers hint of where mistakes or fraud might arise. You see the diagram, it is represented by the smoke. So a company must be able to identify its business risk as well as the established procedure for dealing with those risks to minimize their impacts on the company. For example, Kraft Foods, they faces the risk that its foods product may harm people. Southwest Airlines planes may crash, right? All of these are called risk assessment. So and all the companies faces the risk of bankruptcy as well. This is also a risk assessment. So management of companies supported by their boards have to identify these risks and do what they can to prevent those risks from causing financial or other harm to the company, right? The next one is information system. So information system, it symbolizes by the door of the building. The information system is meant by which accounting information enters and exits. If you see the diagram, it the information system is symbolized by the door of the building. So the owner of the business needs accurate information to keep track of the assets and measure profits and losses. So every system within the business that processes accounting data should have the ability to capture transactions as they occur. A record which means generalize those transactions in an accurate and timely manner. Summarize, which means posting those transactions in the books, which means ledgers, and report those transactions in the form of account uh, or the footnotes in the balance sheet, right? Our second last one is the control procedure, which is symbolized by the door Control procedures built into the control environment and information system are the means by which company uh, gain access to the five objective of the internal control discussed previously. So examples include proper separation of duties, comparison and other checks, adequate records, proper approval, and physical safeguards to protect assets from theft. Right? And our next one, which is the last one in components of internal control, is monitoring of control, which is symbolizes by the window of the building. Monitoring uh, provides eyes and ears so that no one person or group of persons can access or process a transaction completely without being seen or checked by another person or group. So, with modern computerized systems which use information technology, um, much of the monitoring of day to day activities is done through these computerized systems, right? So, computer programs dealing with such systems are like cash receipts, cash disbursement, and they can be automatically programmed to generate exception reports for transactions that exceed certain predefined guidelines. For example, disbursement in excess of $15,000 in payroll for a special management scrutiny. So, in addition, company hire auditors to monitor their control. Internal auditors monitor controls for the inside to safeguard company's assets, and external auditors test the control from the outside to ensure that the accounting records are accurate and reliable. Right? So the audits are discussed more fully in the next section. Like, so what is the internal control in procedures? So there is a difference between components of internal control and internal control procedures. So internal control procedures in a business with a good internal control, no important duties is overlooked. Each person in the information chain is important. The change should start from smart hiring. And what are the smart hiring practices? You must run a background check on the employee, train and supervise him, offer him competitive salary, and display clear or mention clear employee responsibilities. And then separation of duties. So separation of duties, which means that there are separate three key duties regarding asset handling. So they must be a different guy. Record keeping, he must be a different guy, and transaction approval must be a different guy. For example, in the case of a mid-Atlantic manufacturing, separation of duties of cash handling from the record keeping from customer accounts would have removed Mandy Mint's incentive to engage in fraud, because it would have made it impossible for her to have lapped accounts receivable if another employee has been keeping the books. Ideally, someone else should also review customer accounts for collectability and be in charge of writing them off if they becomes completely uncollectible, right? And the third one is comparison and compliance monitoring. No person or department should be able to completely process a transaction from beginning to end without being cross-checked by another person or department. So one of the most effective tools for monitoring compliance with management policy is the use of operating budgets and cash budgets. So a budget is a quantitative financial plan that helps control day by day management activities. and use of computer to produce exception report for data that are out of the line with the exception. For example, if customer pay you more than $15,000, or if you are paying as your supplier more than $100,000, then you need special kind of approval. So department managers are required to explain the variance and to take corrective actions in the reporting or in the operating plans to keep the budget in line with the exception. And the last one in comparison compliance monitoring is the audit. To validate the accounting records and monitoring compliance with the company's policies, most companies have an audit. An audit is an examination of company's financial statements and its accounting system, including its control procedures. Okay. Our fourth one is the adequate records. Accounting records provide the details of business transactions. General rule is that all major groups of transactions should be supported by either hard copy documents or electronic record. The example of documents include like sales invoice, shipping records, customer remittance, purchase order, vendor invoice, receiving reports, or cancelled checks or paid checks, right? So documents should be pre-numbered, right, to ensure completeness of processing and proper transaction cutoff and to prevent theft and inefficiency. So a gap in the numbered document sequence draws attention to the possibility that transaction may have been omitted from processing. Our second last one is limited access. So to complement our segregation of duties, company's policy should limit access to assets only to those persons or department that have custodial responsibility. For example, access to cash should be limited to person in the treasury department who handles the cash. Sorry. The next one is lockbox system. So cash receipts might be processed through a lockbox system. Access to inventory should be limited to a person in the company warehouse where inventories are stored, or the person in shipping department or receiving function. Likewise, companies should limit access to uh, records to those persons who have record keeping responsibilities. So all manual records for the business should be protected by lock and key, and the electronics should be protected by password. So only authorized person should access that. And electronic data files should be encrypted, which means processed through a special coding to prevent their recognition if accessed by a hacker or other unauthorized person. The last one is a proper approval. So no transaction should be processed without managers or management journal uh, or specific approval, general or specific approval. So the bigger the transaction, the more specific approval it should have, right? So for individuals or small transaction, management might delegate approval to a specific department, such as in the following example. For example, sales to customers on account should all be approved by separate credit department that review all customers for credit worthiness before goods are shipped to the customer on credit. So this helps basically or ensure that the company doesn't make sales to a customer who cannot afford to pay their bills. And then purchase of all items on credit should be approved by a separate purchasing department that specializes this function. Among other things, a purchasing department should only buy from approved vendors on the basis of competitive bids to ensure that the company gets the highest quality from the most competitive prices. The last one is all personnel Decisions like to hiring, firing, and pay adjustment should be handled by a separate human resource department that specializes in personnel related matters. So we just finished the internal control procedures. Let's move forward.